y'all. How y'all doing?
So thank y'all for coming out to our, what we call it, Brian, investment.
The investor panel.
Yes, investors panel. And
Investor panel. I think today we're primarily going to be talking about longer term rentals.
Yeah. There's Sheila.
Candace has done everything, so we'll just.
I know, she's
So
what you call you? The girl with tools?
Yay, girl with tools.
Girl with tools?
We have to put limits on her, otherwise she'll like go down
I know.
I know,
I won't do it.
It's like, this is what we're talking about today, Candace.
Okay.
Okay, guys, thanks for coming. Yeah, we're doing a real property investment panel. We're going to try once again to video. I did turn off the cellular, so hopefully any calls won't interrupt everything.
Did you do it on Facebook?
I think I've got us all framed here. So, if you guys haven't already, scan the QR code, register on that, and I'll send you an email afterwards with notes and hopefully our video. And we'll go from there. If you've already signed up for a previous one, you're already on the list, so you don't have to worry about it. So, anyways.
Did you want to go live on the Facebook forum?
No, we're not gonna do live. We'll just we'll clean it up and
We don't want that pressure.
hopefully post it afterwards. So,
Well, thank you guys for coming out for this amazing panel. We have Brian, my brother from another mother. Kind of tell we look alike a little bit. Then we have Sarah Scott and Holly Evans and Candace Bronner. I'm sure when these agents got started in the business, they never thought they would be at this point in their career. Or they might have thought it, but they just couldn't see it right away because, it takes one person to ask you about doing investments before you just start jumping into it, And right now, real estate investments is the safest bet going right now. That's why the banks are struggling. See, banks are different. Banks, we make money if we save our money. The banks don't make money if they save their money. They have to give their money. They have to give their money out, lenders and investment people to make money. And so when you have higher interest rates, and then you have people who, I was talking to an agent yesterday and said that her buyer came back and said, oh, well, my friend is a financial advisor, and he said that to not buy a house because the market is going to crash. I'm like, believe that if you want to. And if he's a financial advisor, tell you that he's probably a broke financial advisor.
Yeah.
Because
He's not making a commission.
no, he's not. Exactly, he's going to take that. So the thing about the market is that what people are realizing now is that real estate is the safest investment. And if you look at the last 2 years, I can't remember what the number is, but there were so many investors that was in the market buying up stuff and buying up neighborhoods. And, for a long time when I worked at Perry Homes, they wouldn't let you investors purchase new builds. They wouldn't let you do it if they knew about it. A lot of times they didn't know about it. But you had investors buying a lot of houses in different communities because they had the money and the means to do it, cash money to do it. So this is another way to really, really to build your circle of wealth, is get into the investment category. Did y'all want to say something beforehand before we get started, or just go and get into the questions?
I'll say something real quick. When we kind of put this together, I asked these three level agents to my right here to kind of come up with some common questions. So we gave Marquis the big list.
Yeah.
I don't think we're gonna get anywhere near through all of it. So we just kind of gave Marquis carte blanche to go through and ask which questions he feels like.
And I think all of them are important, so I'm going to try to get through as many as I can if possible, so y'all bear with us. So the very first question is, how many investment properties do you own or manage? Brian? Do you need a microphone?
I'm fine. I currently own 5 homes in addition to our personal residence. I owned 6 at one time, but we bought that one with a partner, and we ended up having to sell because I couldn't buy them out at the time. So, anyways.
Sarah, you want to?
Sure. We have 2 long-term rentals, and we are under contract for our first short-term rental that should be closing sometime in the next 2 to 4 weeks.
In addition to my primary home, I have 1 long-term rental. I have had other long-term rentals that we sold, and I did own a commercial building that we ended up selling. But I'm currently in the process of purchasing 3 properties, 1 with 2 houses, for flips right now.
I own a
11 currently, and I have bought and sold several over the years, but I hold 11 right now, but my goal is 100, so. So scary, so scary.
Well, hey, you can't get to 100 unless you start with 1, so you're on your way. Yes. Next question, when did you guys start investing?
I tried for a very long time. In fact, I was just telling someone that's here today about, I tried for like 20 years, and I never could figure out how to do it because I did not have very much cash. My husband and I were public servants, and so, yes, eventually, we climbed up the pay scale ladder, and we didn't have lifestyle creep other than that we had kids, which are expensive, it turns out. It's a big surprise that kids are expensive. So it took me a very long time, and then finally it clicked that I could use equity to get started, and that was a game changer for me. So I cashed out of our little ranch. It sounds fancy, it's not. But it had grown in value, and so I was able to pull like $120,000 in equity out of this little ranch, and I used that to get started, and it just snowballed from there, and I probably bought 2 or 3 a year since then until now, and I'm trying to buy at least 6 this year. My stretch goal is 12.
I started about 10 or 12 years ago. That's when I bought my first property that we initially purchased for a flip, but didn't know what in the world we were doing, and once we got into it, found a lot of problems, so we ended up holding it. And we made money off of it. It just took a couple of years before we were able to sell it. And the only reason we sold it is because it was in spring, so it was an hour away from us, and it was an older property. So even though we remodeled it, we were just waiting for it to start having a lot of issues, and we didn't want those to be our issues. And then since then, I've purchased one other one in Katy, and then the commercial property we had was also in Katy.
We're the investor babies up here because we just started in 2020. We got our first one, we closed like the week of Thanksgiving, I think. And actually, Christy Boland was the listing agent on that one, so thanks, Christy. Yeah, so we kind of, 2020 was we had thought about it before, but hadn't had the fuel, I guess, for the fire to do it until everything kind of shut down and we saw income, go away, essentially overnight. And so wanted to produce another income stream, which is really why we got started. So 2020, and then our next one was the summer of 2021. So
Great time.
This one's been under contract for a year, so yeah.
Hill
Any
Country.
day. Hill Country.
And we're all ready to rent it.
Yeah.
And he's
Put
like,
me on the
"Let's
list,
go."
Brandon, put me on the list, baby.
Yes.
Put us on the list. I bought our first investment properties, like I said before, as a partnership. That must have been 2008, right as the crash was happening. And for reasons I won't go into, our partner needed to sell, and we weren't in position to buy it, so we ended up selling it. But it was originally intended as a flip. We found out there were 2 more layers of flooring underneath the one layer we thought was there. The pool needed to be replastered, the swing set needed to go, and it was double concreted into the ground. We ran into a whole bunch of issues, and we're like, this isn't gonna work as a flip. So that was my first foray, and then it wasn't until 2020, actually, until we bought the next one. So there it is.
Well, fantastic. So the next question is what is the one thing you wish you had known before you started, Brian?
That's a Candace question, I bet.
I know, Candace,
She just
she
said
probably
it,
got
We all knew these questions before.
Yeah,
Think about it.
probably to look deeper than surface on these properties. That Memorial Parkway house just ate us alive. So if I had taken the time to look deeper, then we probably wouldn't have had that problem.
Maybe inspections?
Well, just taking a closer look. I mean, we did a real cursory inspection of the property. We had a contractor friend come in and look at it and give us some estimates, but we didn't dig deeper. I probably would have, paid more attention to the flooring at the time. to notice that it was noticeably higher than the rest of the house, you know, things like that. And probably would have gotten a full inspection, which we didn't at the time, so.
I think the one thing I don't know about Brandon, but we should have just got started. We should have just been brave and done it, because you probably will stumble and fall on your face a little bit, 1 or 2 times, but not every time, and you're gonna come out better in the long run. And we're just now, I mean, it's 2023, and we're just now really starting to see some bigger financial boosts and helps that we weren't anticipating and we didn't even fully know. And if we had started 6-7 years ago, you know, we've been way ahead. So I guess the thing I wish I would known is not to be so scared. Like, it's bad things will happen, but it won't be the end of the world. Even if the worst thing you can think of happens, which did happen, one of our rental houses, the pipes burst in the freeze and the ceiling fell in. I mean, that's one of the worst things I can think of, and it's okay.
Yeah.
You know, we fixed it, and the family is safe and fine, and still trucking along, and that house is making us money. So just get started. Don't be afraid.
Definitely second, I wish starting earlier and more often. But really, I wish I would have known the options of actually financing the properties, which I've just started to understand thanks to Candace and one of her classes that I went to. So that went from us sitting talking about trying to do something to purchasing, 3 in a month and a half? So.
I had a great mentor. I was just like really, really lucky, and she was a good personal friend and had done real estate for a long time. And the best thing that she taught me was it's okay to say no. You know, I probably looked seriously at 100 deals to buy 3. And so it's okay to say no. I think the biggest thing that I learned was that you're going to get better at it, and it's okay in the beginning if, you know, you're just kind of making it through, you know. But the beautiful thing about real estate is it has a way of recuperating, like she was saying. She imagined a worst case scenario, and then that happened, and your money is still there. You know, your money is still in the walls of that building. You had insurance. You probably made updates to the house and actually have more equity now than you did before that freeze. So it's an amazing thing. I mean, I was just talking to an investor client of mine yesterday, and she was like, oh, we did this flip in Omaha, and it was a nightmare, and we ended up long-term renting it, just as all of us have had a flip. Raise your hand if you've had a flip that turned into a long-term rental. Yay, everybody. And she was like, oh my God, it was this nightmare, and it's horrible, and my husband is so stressed about it. And I was like, well, let's finish the story. So what happened? And she was like, well, we did a long-term rental for 3 years. We cash flowed about $500 a month, and then we ended up selling it. Well, how much did you make when you did it? I was like, well, you know, we did pretty well. Let's quantify that. How did you? We made $100,000. Okay, so it worked out then. And she was like, yes, no, it did. It worked out. It was very stressful, but it worked out. And so I think you need exit strategies, yes. And you need to run through those scenarios in your mind, yes. But the reason why we're here and we keep doing it again and again is because you can get through those things. You know, if you plan well and you work hard, you can't be lazy about it. You do have to plan well and work hard, but you know, you can get through anything.
And I'm going to the next question, but I want to comment on what she just said, is that you can't get focused on the month-to-month cash flow that you're making. Because even though you may only make $400 a month, the purpose of the investment is to having the asset. So you have the asset now. So that asset is going to increase 7, 8, 20% or whatever it did. In the last 2 years, it's been crazy. So even though you may only, you may look at your friend may tell you, well, man, why are you owning the house and you're only making $400 a month on it? But they don't understand that, okay, this house I bought it for $160, but in 5 years I can sell it for $225 or whatever it may be, So that's the part that you really have to, what she's just talking about is that the asset is really into the ownership. Even though you may not be making the money, it's the ownership that makes it worth it. Next question, do you guys self-manage or use a property manager for your rentals?
So I do self-manage, but I have an assistant who helps me with other things other than my rental properties. But she does help, but that's because I have short-term rentals. I have 4 short-term rentals, and it is a lot of work. And it was taken away from my other investments and my other work. And so I hired her, and so she really primarily works on my short-term rentals, but she does do other work for my long-term rentals as well. But my first 5 or 6, I absolutely did it by myself. And even my remote investors do, because today, you know, a tenant can take a video and FaceTime with you or Zoom or whatever and live stream and show you a problem, and you can send out a contractor to fix it. So unless you are retired and want to go and fix a dryer, then, you know, you need to be willing to pay trades to help you and, you know, have a good handyman. My handyman is amazing, and he is retired. And this is what he does for fun. So it has worked out really well for me. I would encourage everybody to consider managing it yourself, unless you absolutely, you know, need something completely hands-off and you don't mind that you're not going to cash flow very well, because you're going to write off a big portion of your profit to a property management company. And what are they going to do when you need to replace something? They're going to call you. You're still going to have to answer that phone call. And they're going to send out a handyman, and you're still going to have to pay that bill. So for me, that's what's worked best, but everybody has a different model, and I totally understand that.
I self-manage and will until the foreseeable future. I'm too cheap to pay them to collect a check for me, because that's essentially 90% of what I do, or probably 98% of what I do with my rental property is I just collect a check. I mean, we get the occasional call, but like Candace said, we have a contractor that we call, send over there, they get it fixed, and other than that, I'm not going to pay somebody 6 or 10% or whatever it is to cash a check for me.
Yeah, so for our long-term rentals, we manage it, self-manage ourselves, and then we are undecided on the short-term. They're offering some things with marketing that we might use a manager, because it's more of a resort-style property. It's just a different kind of property. So, to TBD on the short-term rental.
And I self-manage our properties until such time as I'm not going to anymore.
Yeah.
But I guess I may be a little more unique. I've actually culminated relationships with all my tenants. So 2 of my tenants referred 2 of my other tenants. So I thought that was pretty cool.
Yeah, so.
Before we get too deep into it, I know there's a lot of new people in the room, so they may not understand what's short-term rental versus long-term rental. If you can maybe explain that to them, you know, Candace, or y'all smart people probably don't know that, right?
So short-term rentals are like Airbnb, where people can stay for a short term between 1 night, 2 nights, 3 nights. Usually it's up to a month. There is actually middle-term renters, which I don't have one for the most part. And that's like a traveling nurse is a really common example. So they're gonna rent your house for 3 months. So it's furnished, you have pots and pans, there's a washer and dryer. It's like a home, but it's for a longer term. So higher than monthly rent. And then a long-term rental is typically considered more than 6 months, but for most people, it's 12 months as a long-term. So like a tenant, they live there, they have kids, they have a dog, they use the schools, you know, they use the pool. It's a long-term. They live there.
So next question is, how has real estate investing helped you reach your financial goals?
I mean, for me, it's been seriously life-changing. And as he alluded to earlier, for me, the real game was appreciation. I mean, it's taken me to have this many rentals for the monthly income to be substantial, to where I'm like, okay, like, my husband could legitimately retire and have a small salary just from the monthly income. But the game changer for me was the appreciation. When we sold our first, I also have student housing, so I had all these graduate students living in this luxury townhouse. And I sold it, and I had only owned it less than 2 years, and I made $80,000 when I sold it. And that was like the light bulb moment where I really saw the value of the appreciation, and that someone else was paying down the loan. So my mortgage is, you know, it's going down. I'm dealing with it. I'm cash flowing a little bit. I think that property was pretty good, $700 or $800 a month. But then in the end, over less than 2 years, I mean, way less than 2 years, it appreciated that much. And obviously that was market timing. I mean, that was market timing. That was lucky and to some extent. But then you look at my portfolio and how much the whole thing has appreciated, and that is big girl money. So that is very exciting. And then a projection on that, I mean, just that's out of control. It's extremely exciting. And I can't wait to keep growing it and keep doing it. And I've already, my kids are already positioned. I've started working towards building them credit so that when they are 18, they will buy where they live when they go to college, and they will have roommates who are doing the same thing for them. That is like a major goal of mine. Yay.
Yes. You need me to repeat the question or?
Yes, please.
Yeah.
Sorry, that's okay.
Is, how has real estate investing helped you reach your financial goals?
So we're not there yet, but it has definitely helped on the properties that we have ended up selling. You know, the equity, like Candace is saying, it was helpful to pay down other debt. Our biggest goal is to get to where my husband works out of town. He's in oil and gas, and he's gone 50% minimally at a time. So we want to get enough properties to where he can quit, and we stay home and manage our properties, or look for other flips, or start looking into short-term rentals. So just one step at a time to get to the final goal, I guess.
That's definitely, it's a long-term game for us. I mean, it's not something that we're looking, you know, even in 5 years, we're not gonna retire in 5 years or anything, but we do wanna be able to retire someday. So, the nice thing is, like, I'll just say too, if you don't track your net worth every month, start doing it, because you'll start to see what's helping you and what's not. And I've started looking at, like, okay, well, this is how much these homes actually add to our net worth every month because of the principal being paid down. And it's not a lot, but I mean, it's not me having to put cash out there somewhere, you know, someone else is earning it for us.
It's kind of a forced retirement, too.
Yes. And we're looking at things too, like we did a cost segregation study this year, and it's gonna possibly buy our next rental or part of it, you know, so we're looking for our assets to start buying our assets for us. We're not there, but that's the path we're heading on, so that's how it's gonna help us.
Right.
And I'm gonna build on that. How it affects my long-term goals is basically a bottom line number on a net worth spreadsheet. I don't have to worry about my older two kids. They'll be fine more or less without me, but I do have a special needs daughter that I have to plan for long-term care after I am gone or my wife's gone or whatever. And that alone is, bottom line is probably $100K for a full-time nurse to watch her, in addition to all the other things. So I'm looking at a bottom line number on a spreadsheet. There's no emotion involved with it other than making sure that the money's there for her. So appreciation, the cash flow is really nice. Although my wife told me just the other day, she's like, "Are we making anything on the house?" I'm like, "Yeah, it's in an account that you never look at, but every month there's a bunch of money." Yeah, there's a bunch of money. Like every month, there's a bunch of money being dumped into that account, and she doesn't pay attention, but I do because I'm just watching it go up, and every day I'm looking for houses, trying to find my first damn house in Katy.
Question.
The cash flow is very hard so far that I've seen, right? So everybody wants to get into investment because they hear the $500, $700 cash flow, and I don't think that really exists. So I'm trying to be a little bit more practical for myself and for my clients. What has been your experience so far? I've seen is like basically no cash flow, maybe even negative for the first couple of years, while it appreciates. Because obviously, when I say cash flow, it means from your mortgage to what you're getting, but you don't see that they're also getting that principal payment. And some people forget that, which is that appreciation. We're making money, you just can't touch it. It might be a little negative on the flow, but still appreciating. What have you guys seen? How do you get those margins? One, time, and two, identifying those properties.
I don't know about y'all, but I'm finding that you've got to find houses off market.
Right, off market.
Yep,
They're
very
listed,
simple.
it's too high.
Well, it's not that it's too high, it's just that that's what fair market is, and, you know, fair market rents and fair market prices tend to go relatively in lockstep. And when you add to that interest rates, you know, ticking up, I mean, it certainly makes it harder.
And a lot of people, you know, they all want the 1% rule, which you
Yeah, it's
may have
hard
been
to
able,
find.
I mean, I found one on market, but that was 10 years ago. You know, that house right now, what I get in rent would not come anywhere near to the 1% rule if I bought it. But, I mean, my husband and I have even looked at some where we aren't making any cash flow, or we might be paying $100 a month, but ultimately I'm paying $100 a month to own a house.
Right.
That
Someone's paying for you.
down the road, so it has to be, it can't just be a very, I act like I'm not getting any money on every month. I have an account for each home, and it goes in there, and I just ignore it, and I have the money there if something happens, but, you know, and if I need to, I can access it, but I pretend like it's nothing, because my long-term goal is the home is going to appreciate, and that's when I'll cash out later.
Sure.
Do you use a wholesaler, Brian?
I'm on a bunch of their lists, but what I see from wholesalers is not what I'd want to own. I don't want to drive an hour to get to the property.
And also, do not trust their numbers, ever.
Yeah.
They're not even
Right.
close to what they should be.
I buy a lot from wholesalers. It's exhausting. Like,
She's willing to drive an hour, though, I'm not.
I am, because for me, I want this to be my job. And so I do drive, and you can negotiate with wholesalers. A lot of people don't realize that. But I think you also just have to know the markets that you want. I mean, the best thing I can say too is decide on your market. So if you want 1%, I'm gonna be real honest with you. I have a very hard time finding that in Katy. It is doable, and I have done it, but I might go a year full time looking for that and find one. So you find it, but if you really want these massive margins, okay, yeah, go buy Section 8 housing. You'll make a ton of cash flow, but then you're not going to make as much in appreciation, and you're going to have more work, and you're going to deal with repairs, and you're going to be turning over tenants all the time. So it's a great business model. I know lots of people who do it, and they make lots of money, and they're very happy. Mobile homes, that's a great way to make 1%. But I would strongly advise you to watch appreciation, because you have bought a depreciating asset, right? It's tricky. But I know a lot of people who make a lot of money doing it. So I think it depends on what is it that you want. Do you want something that is in move-in ready, perfect condition? Do you want to rent at the top of the market and set a record for the highest rental in that neighborhood? You're probably not going to hit 1% or even close if that's what your goal is, unless you're, remodeling the house, which is my personal strategy. But I think you can't just look at 1%, right? You have got to expand that to a bigger question. Is your game appreciation? Do you not want to drive? Do you not want Section 8 tenants? Do you want Cinco Ranch? Do you want the best schools? Well, if the answer to all those things is yes, or no, hang on, the converse, I think that totally changes your portfolio and what you're looking for. You want this turnkey done thing, well then you need to pay market value for that. If you want to put in work and you're gonna fix it up and you're gonna, refinance it later, or you can get creative to do those things. But that's a job. I mean, that you're gonna have to, read some books and listen to some podcasts and go to some seminars and maybe even hire a mentor, because that's advanced stuff. If you've got cash and you're like, I don't want something difficult, I make a lot of money in my day job, I'm gonna buy a nice house in Falcon Point or whatever that has good schools, I know the area, I grew up over there, I like it, great. You're not gonna cash flow a lot, but you can do it. You can do it. So I think it just depends on what you're trying to do and how much work you're willing to put into it.
And how much
So you had a
and
question?
risk down.
Yeah, and how much you can put down
Yeah.
and your risk
You might
tolerance.
have to do
I
like
mean,
30%,
Right,
35%.
30-40% to get that
To,
Yeah.
number.
And another thing, I know that I've noticed this, and now I didn't do a whole lot of wholesalers before, but I'm on all their lists, and I see some every now and then that I'm looking at. I would say out of the last 10 that I've looked at, 6 were on the market, and be on the market for $280 and then they're trying to wholesale it to me for $235. So that tells me that they negotiated that price down to probably at least $215 because they're wanting to make, $10,000 to $20,000. So my partner and I were like, we just got to start making lowball offers.
Absolutely.
I mean, that's what, I don't know what their strategy is, but I'm sure that's all they are doing is just sitting out there. And at first I was like, oh, it's just ones that have been on the market for a long time. And then I've run into some, like 10 days, and they dropped $75,000.
Yep.
So
I bought last week on market, luxury neighborhood, 100,000 off the asking price. Like, it's out there, but you gotta write a lot of offers and be willing to make very fast decisions.
Well, and also, I'll add one more thing and then we'll move on. You said, when you go on listing appointments, your first thought should always be you. If you can offer to buy it from them, you lose your 6% commission, maybe you write it into the deal, but maybe you just buy it 6% off price.
yeah, I follow people on Facebook, and there's a guy that does short-term, long-term flips, and that's his strategy when he goes on a listing appointment. And he says, I can give you a cash offer, and he was telling a story. He was actually helping his brother. His brother is getting into real estate, and it was like $1 million listing, $1.2 million or something. And they asked about the cash offer, and he said, well, I could give you one, but I really don't want to insult you because it would be an insult because your property's worth 1.2. And they're like, oh, just give it to us. And I think he offered like $850. And they were like, yeah, I'll do it. I don't want the hassle. And so he bought a $1.2 million house for $850,000. So, I mean, the worst thing to do is say no.
That's how I get all my investment properties, usually. I mean, somebody calls me and knows that I flipped, and then I go in and meet with them about putting it on the market. I'm like, okay, here are the comps. This really isn't, most of mine are not very nice houses when I go in initially. So, and I'll say this is kind of what it's worth, but it's not really something that's gonna sell on market. So if you're looking at an investor, oh, well, you're an investor, do you just wanna buy it? Sure, I do. Here you go, let's go.
Till you had a question I want to for you.
Yeah, what's a price point you guys look for? I know everybody has a price point, whether you go above or, below that, there's always that initial price point that you guys look for investment properties.
I'm looking at 275 and under, which makes it really hard right now.
Oh, yeah, right now it is.
I'm finding them, but they're not in Katy.
Yeah.
Same. Our first was 215 and then 250, so we're trying to keep it around there, but it's few and far between.
All of mine so far have been under 3, but that's not like a hard and fast number. One of the reasons is I try to get it because if I can list it for between 250 and 3, it's probably going to sell a lot easier than if I was listing for 550 or 6. But I mean, if I could get a $600,000 house for $400,000, I would buy it tomorrow. So it's just really about the numbers.
I have a huge range. The cheapest house I ever bought was $70,000, and the highest value that I currently hold and have a lease in place is just under $500. So very different. Well, that's not even true. Probably $600. That appreciation at this point in the house, probably worth that much. But anyway, what was a huge game-changing feeling was in the height of the hot market, going around to these houses listed at around 200 in Katy. And how many of us showed up and looked at the house first day on the market, hours on the market, and it needs renovation, it's listed under 200,000, and there was 20 other people there. We all went to that house, right?
20 more on the way.
Yeah, and let me tell you about most of those people. They're beginners or they're contractors, and they are willing to work with a 5% margin. 5% margin can get out of town. I'm not doing that, I don't have time for that. And so after about going to 10 of those, I decided I'm going to do something else. And so I completely changed my strategy, and I'm not going to compete with that many people. So my biggest advice about that $200,000 price point is if you show up to see the house and there are all these other people there, leave, okay? You do not want to compete for those margins. Find somewhere that other people are not going to be so much competition, and be the master of that market to where you see the street name and you know what that property is worth and you are willing to make an offer within a very short period of time. Like, that is how you can change the game. I would just say don't compete with huge crowds of people. Like, you're going to spend so much time, and as agents, like, please give that advice from the very beginning. You know, look around this room. A lot of these people don't care about a big margin. They just want to get going, or they're contractors themselves, or honestly, or they don't know what they're doing and they lost money, you know?
To follow up on it, the home that you have just shy of 500,000, do you find that it's harder to rent that home out because obviously the mortgage is much more expensive?
I was nervous about that, but with the migration that I have seen, at least in 5 days, somebody bought all of the staging furniture for $10,000 and then had me call her attorney in Boca Raton to pay for a new fence that she was gonna pay for, which I made very clear that I was not gonna pay for, and then I would keep it after she left, and then call her other attorney in Beverly Hills to pay for custom new blinds that I was gonna keep. So no, I mean, it's a risk, it's a very different kind of risk, but I talk to
Candace is lucky.
investors regularly. Well, it was a calculated decision. I mean, it was the right market. But I talk to investors regularly who have luxury leases as their entire portfolio. It's their thing, you know. So I think do what you know and what you can tolerate the risk for. That property started as a flip, actually. And on a whim, I was like, I'll just list it for like a ridiculous amount. And just see, like, if somebody wants to pay that, hell yeah, I'll take it. I'll make $1,000 a month on that house. More than $1,000 a month. So, I was all in. As soon as, she was wanting to do it, and I said, absolutely, and then the deal just got better from there. So, I think it just depends. I mean, Houston, the migration that we're experiencing is, like, unprecedented, and a lot of that migration and immigration are people coming from markets that are a lot more expensive than ours. So I think it's just about your risk tolerance. If you know nothing about the luxury market, probably don't buy that. But if you have some knowledge about it, and this particular area and property had some horse connections, and I know horse people, so it was luxury, but it's a different kind, right? I ain't going to River Oaks or anything like that. But anyway.
And you may not want to do what I did. I know I'm not on this panel, but, you know, in 2016, my wife had this brilliant plan, I think I told Brandon the story, that she wanted to become a home builder. So I invested all this money into her. And I found these 2 lots right next to each other that was pretty big. I think I paid $49,000 for them. Now, mind you, whenever you do this, the bank is not going to give you any money until you show them that you can do so. I bought these lots, and then we built 2 houses. You know, gave her a budget. Of course, she didn't stay in the budget. You know, but the thing about it is, you know, when you start off doing new builds, new construction, you have a lot more stuff to contend with. You got to deal with inspections. You got to deal with stuff with the city. And the city of Houston is the worst place in the world to build something. You know, and you have to deal with theft. You got to worry about people stealing stuff. You can't deliver shingles unless they're going to be put on that day, because if they sell overnight, they're going to steal them. It's guaranteed to get stolen. You know, and so, but I say all that to say is that with the new build, it's about timing. Because the same houses that we built in 2019, or 2018, 2019, we sold them for $270,000. Now those same plans are selling for $400,000. You know, so if you can keep that same budget of $140,000 that I gave her, and now you can sell them for $400,000, now you're making a lot more money. So it all depends on the neighborhood that you can get in, because every neighborhood is gonna have a ceiling of what you can sell it for. Even if it's a brand new house, it's still gonna have a ceiling of what you can sell it for. So it was a little bit different, a lot more risky, drove me crazy, but
and it's longer.
yeah.
You can't renovate it or turn it and get a tenant in 3 months. Like, no.
And my suggestion was, I'm like, well, why don't we just build them and rent them? Because if we would have did that, now the equity probably would have doubled in the last 2 years, or probably more than that, almost, you know. So it's really having a good plan, you know. But starting off the new build route, don't do it. I mean, that's a little harder than most to do that. So.
But the margin is good.
Yes, they're very risky. I know from fact, I'm like, you probably could have kept your job and made money than what we made on these houses. But next question, and I hope y'all know what this means. What is your FIRE number and why? Fire number. I don't know what that means, but.
Financially independent, retire early.
There you go.
So I was in education. I actually have a PhD. I was in education, I was teaching university, I was assistant head of a school, I mean, I did all that, and it was great, and I honestly really loved it, and I occasionally miss it. But I fired myself. I didn't really do the R part, you know, but my investments were doing so incredibly well that I teased that I fired myself from education, and I'm trying to fire my husband from his job so that he can do this with me. So I don't have an end number, I think, but as far as the financial number that it is, but like I said before, I'd like to own 100 houses, and my calculations, you know, have that as we would probably have 3 or 4 staff. To where they are running the business for us, and we can be a little bit more hands-off. And I know that's going to take some time, but so that's my second firing and retiring.
I didn't know what that meant, so I didn't know how to come up with a quick answer to it. But I mean, my husband and I want to have at least 20 properties, at least.
Yeah, I was just telling Brian, I think ours is a moving target because our kids are almost college age, so it's hard to pinpoint what's our firing number. But in our long-term plan, we have 18 investment homes on there, and I think 4 of them were short-term rentals, and the rest are long-term holds. And we're keeping those. The plan is to keep them forever. So all the cash flow coming off of those.
Gotcha. Okay. I told you earlier about the needs for my daughter. So our number really is $200,000 a year, which equates to about $7 million, I think. It's 4% of whatever your 4% of whatever your fire number is. So yeah, $7 million in net worth. Then if that's throwing off $200,000 a year in cash flow, and that's assuming, of course, our house is paid off by then, our primary residence. But I always told my wife I want to have 20 houses that are paid off and cash flowing every month. That's the goal.
And I think Tia had a question, and then her, and then.
I have many questions, I wrote them all down, but I'm gonna
That's all right, that's what we're here for.
Would you recommend someone who's just starting out, like myself, would you recommend short-term or long-term rentals?
Well, I'm sure Candace will chime in on this, but the big thing to remember about short-term rentals is they're a job.
You gotta remember, you gotta have cleaning people, you gotta have constant stuff. You know, washing towels, and you gotta come people in the house all the time, you gotta fumigate, you gotta do all kind of.
Yep.
It's a lot of, there's a lot more people to have on staff.
We just put an offer in on a cabin in Blue Ridge, which is like a luxury style, to do short-term and kind of like Airbnb it, but I'm scared shitless. So right now, it's kind of like, well, is this the right plan for me? I don't know.
You and Sarah should probably talk.
The short-term rental is a hospitality business.
Yeah.
So if that makes you smile thinking about that, makes me sweat a little bit thinking, oh my, hospitality business. So that's why we're leaning towards probably using a property manager for that. But there's 2 different businesses. Long-term it's a lot more hands-off. You gotta vet your tenants really, really well in long-term, and then I think you'll have no problem, so.
The capital investment is for me bigger with short term because you have got to furnish the home, have technology. The monthly expenses are higher. The income is undeniably amazing. I mean, as an investment property, if you're just looking at the numbers, it is amazing. But when you factor in your hours, I need a nap, you know. I mean, I'm answering a message from a guest every day, and I have help. So it is a lot, and to keep the you know, the 5-star reviews and the level of execution that I want a premium feeling, a premium experience, even though my houses are not, you know, luxury by any means. They're nice, and that's why people keep coming back to them. And it's a bigger learning curve. You know, you have to have the dog area, and you got to have the high-speed internet, and you need to have, and I mean, these things that I learned. For example, amazing thing I learned, one thing. My next time I do this, I will have 2 dryers in the house, because what does my maid spend 90% of her time doing? Waiting for towels to dry. And I mean, that's just insane, but it's true. And so it ended up like my maid services actually now outsource washing the towels because it just takes so much of their time. So anyway, it's like so well said. It's a completely different market. It is. You have entered the hospitality industry. You run a hotel. You own a hotel, and it's just totally different. But yes, it is very lucrative. So I think just depending on your tolerance of how you want to spend your time.
I think you had a question.
Okay, so I have two questions. The first one is this, do you guys all have systems that you put in place after you started doing a couple? I know you said you've only done a couple, right? But I guess maybe this is more directed towards you or to you. Do you have a system in place like, okay, this is exactly what I'm looking for. I'm not settling for anything other than this. And then once I get it, this is what's happening and this is what, do you have things like that in place?
So I think that getting more sophisticated in those systems, you'll never stop. You'll never be like, oh, okay, I have it all down. It's perfect. I'm very proud of refining my financing system to where I'm coming in and out very thin. You know, I'm not putting in that much capital and I'm able to turn more quickly. And that has been a big game changer for me. Saying no to lots of deals is also one of my systems. It has to reach a certain margin for me to look at it because I know I can find it if elsewhere, you know, so don't get too excited because it's close. Say no if it's close. Close is not enough. We're not playing horseshoes or hand grenades. And then I'll tell you areas I'm working on with systems is I think I need to hire a bookkeeper and somebody that actually does like accounts payable to where I'm not constantly dealing with that. I mean, every day there's 3 or 4 bills waiting for me. Pay this utility bill, pay this gas bill, pay this tax bill, pay this. I mean, it's a lot, and that is not a good use of my time. I think it's not exactly a system, but it was extremely helpful. It's something I did a long time ago. I had a big month. I mean, I had great income that month, and I kind of made it like, okay, this is my goal month. This is what I want my future months to look like. Okay, how much did you make per hour? And it was a big number. Okay, it's a very nice number. I have yet to repeat that month. But I mean, it was a lot. And let me tell you, I can pay an accounts payable person a lot less than I was, than that hourly wage, and a lawn mowing person and an assistant that answers the guests at 10 o'clock at night who can't figure out how to use a combo lock, which is amazing to me. And so that is being willing to spend money, I think, is a key thing. And I guess I can't really call it a system, but it's operated like a system. It's a question that I ask myself. And if the answer is, well, $18 an hour solves that problem, then I pay $18 an hour. And sometimes if $100 an hour solves the problem, I pay $100 an hour. I think that's an important metric to come up with. So I guess there you go, it's a metric, not exactly a system. But I just have, for a long time, a Google Sheet. And it was a live document, and every year I opened a new sheet, and I literally just had it like it's the concept of a profit and loss statement, but I wasn't using QuickBooks at the time. And so I truly just put in expenses and rent at the top and had a running total at the bottom that netted out my monthly expenses on my properties. And over time, I got better about, but remember you had to pay the lawn guy to go back because he hit the sprinkler head and he had to go to Home Depot to pick up a new sprinkler head. You did not include that. And I would go back and type it in. So I've gotten a lot better about, my assistant is now on those forms. And it's instant. If I pay something, it goes on the Google Sheet. If I do something, it goes on the Google Sheet. And so those sophistications have come with time. But obviously, a personal goal is to go from being a realtor 100% of the time to being a realtor 70%, 60%, 50% of the time. And so I have that projected out versus an investor. The other percentage was investor. Sorry if I didn't actually say that out loud. And so a huge goal is getting better at systems. I have them and they're working, and I've made improvements, but that is the next step for me, is to truly expand those things.
Can I ask a quick?
And he had a quick question.
Yeah, we talked briefly about wholesaling. Do you have any tips overall, or do you have tips that you found when working with some wholesalers? Anything
So wholesalers are, you know, there's not. Most of them don't have a license, and they read some book and started just doing it. You know, like cool, good for you, man. Like don't trust them. I mean, I hate to say it that way because like they bring you good deals and they make you a lot of money, but until you develop a relationship with them, just assume by default that they have no idea what they're talking about. So run your own numbers, but then you learn the people who are good. As far as like how to find wholesalers and how to network with wholesalers, you know, I spent years building that up. So honestly, it's not something I just say, oh, here's my list of people, like go be my competition. But I'll tell you how I found them. And that is honestly online forums and stuff like that. Like I swear to God, if you just like go on Facebook and you're like, I'm looking for a wholesaler, 50 people will email you within like an hour.
He's not wrong.
And you'll be on all the lists and you'll be looking at hundreds of properties every day. And it is I spend at least 1 hour every morning looking at all the wholesale properties. And you know, 99% of them, they're terrible. They're awful. They're in some weird part of town. Do not send me any more stuff by the University of Houston, everybody. I don't work over there. Stop it. No, I mean, I'm kidding, but it's a lot of work following all the wholesalers because it's a brilliant business, and honestly, I want to become my own wholesaler eventually, where I'm the one working those owners and, you know, procuring the deals myself. But if you have any other wholesaler comments.
I have
think
nothing
that summed it up.
productive to add to that.
Yeah, I have bought a house where I was the third person at closing. It was a daisy chain closing because the wholesaler had it under contract. A second party had it under contract with the wholesaler, and then I was the next buyer, and now I'm gonna sell it. So it's a wild game. There's a lot of questions to ask, you know. I would say if you are looking to wholesale, work with an agent who does it, who's bought wholesale properties, and we do exist because it is a whole different thing. And if you're with Keller Williams, you need to clear it with compliance first as well because they have their own requirements. Like I had to run my first deals through attorneys and pay for that myself for Keller Williams to be comfortable with it. So, you know, it's a different thing. Very different liabilities and everything else.
All right, next question, and we'll probably do questions for another, 15 minutes, Brian, then give them Q&A at the end, you think? Or we'll just get back to questions as we go, whatever works for you guys. Are there any investment property types that you currently don't invest in but would like to, and why?
My next one would be short-term rentals. So I don't currently have any, but that is on the list of things to look into and hopefully find before the end of the year.
Storage units is my dream. We're looking at a deal. I don't know. It's probably not going to go through, but that's very, very new to us. So that's one we're learning about and trying to get our feet wet in. But that's my ultimate where I'm headed in my mind.
Get up.
Next.
All right,
And let me expand on that. I don't want to do anything commercial. I don't want to do anything short-term. I don't want another business. I don't want another job. I have too many already. So anything that we're going to get involved with on the real estate side, it's going to be residential because people will always need housing and they will always need someplace to put their junk. So,
exactly. Are there any investment property types that you have, well, you just answered, have no interest in? Okay.
I'm sorry.
What is the best investment you've ever made so far?
Let me think on it, y'all go.
Like, I don't.
Like one particular property or, you know, that's giving you your biggest returns? And
I mean, from the two, one was a little more, well, I guess we bought it earlier, so it's got good returns on it. And then the next one was, had been redone. I mean, we got really lucky because it was on the MLS. It was completely redone, new kitchen, new all the things. We didn't have to do anything to it, just put a tenant in there. So that one's been the easiest. But I mean, we make we're about like 1,200 in cash flow a month between the two. So I like them both. I'll keep them both.
The best one financially was the commercial property that I owned. We fell into one of those little buildings on Provincial, the office buildings. Our accountant had another client that needed to sell the building and wanted to immediately turn around and lease it back from us for 3 years. And yeah, we made about $1,000 a month on that lease. It ended up not being the best because like the last 2 months of his lease, he disappeared. And anyway, we ended up having to sue him, but he paid eventually, and we sold the property and made a good chunk of change on it. So that was the best one financially. The easiest one I have is my rental in Katy. The tenants, they've been in there since we bought it 8 or 9 years ago, and actually found it because they called on a lease listing we had, and that didn't work out. And in talking to her, found out they had lived in their current rental for 5 years. The only reason they were moving is because the owner was selling it. They didn't have the best credit and admitted that they paid late sometimes, but always paid the late fees. Confirmed that with the landlord. Told my husband I'm going to find a house to buy and put them in it. Knew what they wanted to spend, and did that. And the first year they paid late about 6 times. They always paid the late fees, and then it just got to the point where we just had to have kind of a come to Jesus with them and look, we're willing to work with you. Because it was like, oh, well, the bank mailed the check. I don't know why it didn't get to you. I'm like, really? My bank mails checks me all the time. They always get where they're supposed to go, you know. So,
Direct withdraw that next
yeah.
time.
So now they drop cashier's checks off at our house every month. But, you know, after we had a conversation, like, look, we're willing to work with you. We just need you to be honest. If you're going to be late, tell us you're going to be late. It's fine. You want to pay us $300 extra in late fees? We will take it. Yeah. But then they stopped paying late, and they've been in the house ever since. And keep telling us that if we ever want to sell it, they'll buy it, but why would we sell it, you know? They're paying for it either way, so.
I am going to answer in an unusual way. I am extremely proud that I was a homeowner at a very young age, and I didn't think of it as an investment. But if you are a homeowner, you already own your first investment property. And look at using the equity out of your house to get started in investing. So, you know, I think the best investment ever are yesterdays because they're the ones that are already building, and my next best investment is tomorrow. You know, I just believe in it that much, I really do. And I'm really proud of all the things I said no to because I did very well in the big yeses. But for a straightforward answer, I would say my first flips, I was terrified. I believed in the numbers and my little prayers to baby Jesus. And it just worked out. You know, I did cry once, and I'm not a crier. But so that just shows you the level of stress. Once in 10 years I cried, and it's over that house. But yeah.
And I know, like, again, I'm not on this panel, but one of the best things, and I don't have a whole lot of investment properties here. Most of mine are around LSU, because I have an uncle that I talk to probably, if I answer my phone, I probably talk to him every day, but some days I don't answer the phone. But, so he's older now, he's 70 plus years old now. And so what happens is when family members pass away or they get older and they don't want, so we end up just buying the houses and they do it, I don't do nothing, I just give them money. But they renovate it and then they turn around and do short-term rentals. And every football season they make way more money than that, you know, because you can not only rent the house out short-term rental, it's always full.
Yep. And
some of them are big lots. Monk even charges people to park cars there for the game.
Yep.
So
Yep.
he charges $25 a car to park. I mean, he can park like 30 cars in the yard, so it's like he's making that money. And the tenants are okay with it because, you know, so that's one of the things that would help us is that you have some people in your family that, you know, they need your help. And, you know, ask them and go to them. You know, people pass away. That's a way of keeping it in the family and keeping it from someone else from getting it.
Yeah, I think I remembered which one's mine. Well, I have two actually. I've got a house in Rosenberg that I've got a family of 4 in. I have a double deposit on them because of some credit issues that they have. They pay me 2 months of rent at a time. They have replaced the air conditioner compressor for me, and they've put in garage door openers in that house for me. which I'll get to keep. The father in the family works in the distribution of air conditioning parts and products, so did all that work for me. Then I have a condo over by City Center that is a retired Enron executive. She rents that from me. She pays a year at a time, and I haven't talked to her since the day she moved in. She never bothers me.
Might need to just pass by the.
Yeah.
Well, the reason she moved in there is because she lived there for 20 some odd years before she moved out to Firethorn. And she ended up selling her house in Firethorn because she kept falling behind on her mortgage payment because she's starting to show the first signs of dementia. And her daughter and her husband live in the neighborhood right next door to the condo association, so it's somewhere close by that she's familiar with, that her daughter can still keep an eye on her, so. Yeah. Oh, and the daughter's husband gave me a listing in Memorial, so.
And it works in
Be
all
a
the way around.
solution
Worked out
to
nicely.
somebody's problem, that's what they
Exactly.
say.
Yep.
They remember you, because you are the expert. Tim, you had a question?
Yes, I hear you say equity a lot, pulling equity out. How long would you usually wait? And I know that it varies and it depends, but usually how long would you wait to pull equity out on a property that you just purchased for buying another one?
As soon as you can, right?
Yeah, I mean, everybody has a different philosophy. Like Brian said, he wants all his units paid off. I have no intention of ever paying anything off, ever. So I'm the opposite of that strategy. I am leverage. And so I have no problem, with high leverage. As long as it's cash flowing and I'm comfortable with the margin, then I, double down, I bet it again. Because I would rather spread my risk over more houses than a single house. But he has different goals, So I'm in a growth phase of what I'm doing. And so that's why I do it. But it's also just the more complex strategy there. I would never advise that you get below 80% of the value of the property. Because that just starts to get a little shaky with if the market changes or if it slows down or if you can't get the rent you expect or there's a major problem with the house. Like, how are you gonna get out of it? So I wouldn't get yourself too tied up. But it's a little difficult to get yourself too tied up, honestly, with traditional lending strategies anyway. But if you own your home and you only owe $150,000 on your home and it's worth $500,000 and you want to invest in real estate, that's a pretty good place to start. My advice would be, time the market, and when interest rates drop again, just refinance and cash out everything. That's what I'm gonna do, and keep going, because all that time we're waiting, the properties are still appreciating. So the amount I'm gonna be able to cash out once the market changes again and interest rates go down, I'm just improving my position. So I think that's a difficult question to directly answer because it totally depends on your strategy.
And I just want to add, it doesn't have anything to do with that question, but don't be afraid to use help. I think of myself, I'm a very good real estate agent, but she's representing me on 3 deals right now because she had the knowledge of the financing and the area of which I was going into. I could have run the same reports as she, I could have done all that, but it was worth it to me to pay a professional in that arena and not try to say, oh, I can do it. I know what I'm doing, I can do this.
And I pay agents too.
And it has saved me, I don't know, maybe increased her headaches, but it saved me some, you gotta spend some money to be able to make some. So.
All right, next question, which is a good segue. Did you want to answer this, or? What books or other resources do you recommend to a beginner if they're trying to get into? Yeah, if there's such a thing other than what we have on the wall.
Listen to Bigger Pockets a lot. I feel like I gotta get my phone out and go through all the things. On the Market is also a really good podcast. It's the guy who does statistics for Bigger Pockets, so it's a little more numbers and data than necessarily house hacking strategies and murders and things like that. Rich Dad, Poor Dad, Cash Flow Quadrant. Those are some big books that have influenced, our wealth strategies.
You just took all my answers.
Holly.
I'm not gonna lie, I haven't read any books.
Me, I don't read them.
It's funny, I was thinking about this earlier. I used to be a very big reader, and now I don't, as I want to, but my ADD doesn't allow me to sit down and do it. So when I have
thought it was
tried,
just me.
when I've tried to sit down and read some of them, I can't focus on it. So I more talk to people. I need to get into listening to more podcasts. My husband loves podcasts. I just haven't transitioned to that yet. It's like the radio's for music, not for somebody talking at me, but I've started trying to get on Bigger Pockets and navigate through that a little bit. I hadn't been very good at that, so I just talk to people.
Millionaire Real Estate Investor was definitely the one that was changed me and my thinking. I felt like a lot of the books were, you can do it, and not like, okay, but how do you do it?
Full
And
disclosure,
Millionaire,
most stuff, all the seminars, that's what you get is you can do it.
Yeah.
But not a whole lot of how.
Motivation,
So don't
yeah.
waste a whole lot.
Yeah.
Well,
I do not lack motivation. So I got really irritated with some of the books and stuff like that. But I felt that Millionaire Real Estate Investor was more nuts and bolts. Not completely, but a lot more nuts and bolts. I've read all of them. They're all helpful. Audible is great. I love reading. Was an English teacher and professor. But it's a lot to try to get through it all. But I drive a lot. And so Audible has been amazing. So I read a real estate related, investment related, money related, strategy related, business related. Don't forget your business. A couple books a month at this point. The only other one that I would really add as a good when you're starting is Tax Strategies for Real Estate Investors by the Hans. They were accountants and realized that all of their top clients owned a bunch of real estate, and they were like, huh, why? And so they started buying real estate, and they're super helpful. So I thought that was really good. You can also join these mentor groups, the lifestyles and the whatever. It is expensive, but I have clients that do it, and they're like, look, I have no time or interest in reading a book. I do not learn that way. I have money. I don't mind paying, $4,000 or $5,000 to join this thing, because I'm learning and I'm getting deals. So I wouldn't tell your clients, or if you're interested in them, that they're bad. But yes, they're expensive, and you could get that knowledge for free or for a very small amount of money, like reading books. But that's just, it's up to you.
Well, we really only have one more question left, but all the other questions you guys either answered or touched on before. But the biggest one I think is how do you find crews to complete your renovations? I know for me, getting in the home building business, because I worked for Perry Homes before I got into real estate, I just use the same people I used at Perry Homes. The same foundation company, the same concrete guys, the same sheetrockers, the same plumbers. Because I learned that when I was in the neighborhood, I started out in Sienna and Shadow Creek, all the builders use the same people. It's just whoever pays them. We had more leeway to them because we paid them every week. Most builders only pay them every 2 weeks. So if we called them, so I just built the list. At the time, I didn't know I was going to get into home building, but I just kept a running list of all of those people. Yeah. And then when I started my home building, I just used the same people. So how do you guys find your people?
So I renovate houses pretty much full time, and I have grown and grown and grown. When I first started, I relied on one GC, and when something goes wrong, you're like, oh my God, what am I gonna do? And so eventually I learned I have to own that process, and I can't just rely on one GC. You need to have several. So I have someone that's more basic, I have someone that's more advanced, and I have someone that's new construction. And even then, I work subs. One thing I'll say about subs is they know each other. So if you find a really good tile guy, be super nice to that person. Hey, so do you know an electrician that's really good that can do this work? And then the thing I would say to kind of check in on them is ask if you can see their work. If they're weird about that, I would take pause, right? And then also talk to them about permitting and see how they react, right? If they're like, oh, no, I can't permit anything, I don't do that, I don't know anything about that. I'm not saying you can't use that person, but they have limited skills, right? Permitting isn't that hard, you need to do it, you need to learn about it. And if they can competently talk about permitting, then, you know, they're more likely to be a trade that you can use consistently over time, and more likely they're networked, they're in the community, they know the permitting office, they know the code, which is just super key.
That's a good question. Do you permit every single like, do you pull permits on every single one that you do? Do you not want to answer that
She's on
camera?
video.
Yeah, we're video.
Well,
Never mind.
I think it's really
I have your
important
answer.
that your properties are built to code, right? Code will then change 5 minutes after you finish construction, so you have to know that. But I think that's a very complicated question, because even permitting offices will tell you, we'll grandfather that in, don't worry about permitting that, you know?
And that's what I was gonna say, is that every project doesn't require a permit. I mean,
No.
you only need a permit if you're doing stuff
Major systems.
major, plumbing, electrical, you know, HVAC.
Yeah.
Anything that we, so in Texas, is different. In Louisiana, general contractors they have to have a license. They have to go through a licensing
Anybody
process.
can do it here.
Yeah.
Anybody
You
can do
can
it.
say hi.
Exactly,
I've never
yeah.
done this before, would you like me to fix your house?
Exactly.
Yeah.
But the thing I like about Texas is that it's that way, but all of the major contractors have to have a license. All the plumbers, electricians, HVAC people, all those people. So those are the ones that actually have to pull the permits for you whenever you go, you know, because I don't know, correct me if I'm wrong, but you guys can pull them, they do it. I mean, you just pay the.
It depends on the county
Yeah, it
and the
depends on the
city,
job,
and it
yeah.
depends on what you're doing.
Yeah, so answer your question, all of them don't require you to, you know, it doesn't mean you're doing something wrong, it just all of them just.
Yeah, I did
don't
a
require you to do it.
major home remodel years ago, and I live in Cinco. I don't know if it's true or not, but my contractor said, because we're in the unincorporated part, we don't have to pull permits. So they pulled not one, to my knowledge. My house is still standing, so.
I worry about, so I just did one in Cornerstone, and I just worry about that, so we didn't pull permits, and I know I did everything to code, but I just worry, like, should there be a problem years down the road, could somebody really come back? I worry about it from a realtor standpoint, not so much
Yeah.
someone that's just renovating a home.
Well, on the seller's disclosure, you have to be able to honestly answer whether you knew of permits that needed to be pulled and if you did it correctly. So if you're licensed and you're doing these yourself, I think it's a big topic to consider. However, you can paint, move cabinets, tear down sheetrock, rebuild floors, change all your trim. None of that requires permits in 99% of places.
No.
But you want to change one light fixture, and technically you need a permit for that. Like, it gets very tricky. And so you need to get to know the permitting office, and you need to be honest and open with them. You know, even though I had flipped a ton of houses, I had never GC'd a project by myself until recently. And I just went to the permitting office and I was like, look, this isn't a part of the job I've ever touched. Here are some kolaches. What kind of beer do you like? And like, help me not do anything wrong, you know? And I think that's also really key, is that it is about codes and laws and rules, but it's also about just being like really nice to the head electrician guy who has to come and take the power lines off of your house. And you need him to come like right now because the repairman is there and the HVAC guy's also there, and they're all trying to make money for you, you know, so you need him to answer the phone when you call. Modelo, he likes Modelo.
Anybody else?
So contractors, for me, it's been trial and error. The way I found my current contractor that I use on 98% of my jobs, I got pissed off at the contractor that was working on my house. My husband fired him, and this guy was working next door. And I walked next door and said, "Do you have time to come give me a quote?" And I liked it.
Yes.
He did. He walked over,
You
and
know how to say that.
and I've given him a lot of business since then, and I've been working with him for 3 or 4 years. Now, like Candace said, if I had a flip in River Oaks, would I use him? Probably not. But, I mean, he did my house, and I was perfectly happy with it. And then, other than that, it's just talking to other people. This one right here gives me a lot of people to contact, you know, Facebook groups,
Absolutely.
just getting referrals, and then see if you work well with them and if they do a good job, and their pricing. I mean, it's
You'll get the hugest variety of prices. You have got to get lots of bids.
it's ridiculous. I had a $17,000 bid for an electrical job that I ended up paying $7,500 for. Permitted, done right, not cutting any corners. Same thing with the AC. I'm paying $9,500. The quotes I got were 14, 15, 16,000. And when the guy gave me that, I said, "Are you serious? Like, is that a serious number that you're telling me?" And he's like, "Yeah." I'm like, "Well, you're double what I've been quoted." And because he was calling before he even went out to give me a general ballpark to see if he wanted to waste his time or mine. I said, "You can go out, but I ain't paying $16,000. I can tell you right now that's not happening." So you just got to go through a lot of them and find the ones that do a good job and that don't just gouge you.
And even from 2 years ago, prices, or 3 years ago, we're 2023.
Well, his response was that the price of copper has gone up. I'm like, "For you, but not him? Like, it's gone up $7,000 for your shop, but not this guy's shop?" That didn't make any sense to me.
Right.
So, but maybe he had more overhead. Yeah, I don't know.
Well, and it's also like us too, with investments, you know, you said some people will do it for 5%, like you're out of here, that's not working, I wouldn't do it either for that. But, some people are willing to work for less money, and that could be the difference too.
Well, that's all the questions that they have, so anybody else have any questions for the group?
I would make one addition to these ladies' comments, though, is don't assume a general contractor is gonna get permits.
Yeah.
Yeah, no,
They
you have
don't
to
want to.
specifically
They
tell
will.
them to.
They don't want to get hurt.
They will skirt it every bit as much as the subcontractor will.
And the biggest thing is, I don't know, you guys probably don't do a whole lot inside neighborhoods with strict HOAs, but those little gremlins are the ones that give you most of the problems whenever you get ready to sell the house, because if
Yes.
like in Siena or in those places, I had a friend of mine, his house had caught on fire and it, had over 50% had to get it rebuilt. And whenever he went back to, redo it all, his contractor, whoever he used, didn't put one extra tree in the yard, because it's supposed to have so many trees and all. So when he went to go sell it, they had a problem getting the HOA stuff switched over because, "Oh, well, you're missing a tree." He's like, "That tree never was there," I mean, it made it not. So those are the gremlins that give you more problems than the city if you're in the HOA, so just make sure.
Have
you
y'all
know.
ever read the restrictions for like Cross Creek Ranch? They've got like a 22-page document that tells you what kind of plants and what kind of trees
Yeah.
you're allowed to put in your yard.
Yes, yes.
It's insane.
Let me throw in there that may blow everybody's mind on this recent house I did, in the neighborhood called Cornerstone Place.
Uh-huh.
They passed a deed restriction about 10 months ago that you have to get permission to rent, long-term rental in the neighborhood.
Creekstone
I've
Creekstone
never
did too.
heard of that before.
Yeah.
Yes, and then they only allow 10% of the total homes in the neighborhood to be rented.
Yeah.
Missed that on the deed restrictions as I was buying it as an investor.
I know the city of Pearland passed an ordinance probably last year when they had one of the newer neighborhoods, they had a short-term rental where they had this rapper had a party there and people were shooting around. So now they passed an ordinance where in order for you to do a short-term rental, you have to go get it permitted through the
City
city
Katie
of
just.
Pearland.
Yeah, I
did
would
that.
definitely say
Katie just did that.
look into that before you purchase for long-term or short-term. I came across a Airbnb for sale in New Orleans, and I was considering it, and my best friend lives there, and she was like, "You don't want to buy that. They just passed a law. You can't have your short-term rentals in New Orleans anymore." I'm like, "Okay, well, I'm glad I called you because that's probably why they were selling it." But
And it happens to experienced people too. I have a friend that has
Absolutely, yeah.
52 properties. She bought one in Utah for that same reason. After she closed on it, she realized she couldn't do it.
yeah.
I don't know how you didn't realize that for your deed restrictions when you're closing, but I guess it happened to me too with the rental.
Well, and one other thing about the general contractor, my general contractor actually told me when I get my pricing from him, he was like, "Well, do you want the pricing with permits or without?"
Yes.
So, if you want it permitted, I'm gonna have to charge you more because I have to pay more to my plumber or my electrician or,
And then
whatever.
time.
Yeah,
It's
So-
a long
Tia, you have a sports question, then,
But she's
Sam,
doing
and
it
then you.
So I have multiple people that want to be investors as clients, which is not the road that I thought I was going to open up my real estate industry in. And it's absolutely terrifying. I have one that lives in California. She wants to own short-term rentals out here. We're kind of getting down to the nitty-gritty on what she wants and everything. but I don't know how to go and search for them. What should I look into in that sense? I have another one that wants to be a flipper starting in June, and he's an electrician himself. And he refuses to answer the phone sometimes. I have another one that just did a music deal with Marshmallow, so he knows that the real estate market's good, but he lives in South Carolina. So there's a number. On the short-term rentals, what would you advise for somebody that is outside the state to need in the sense of me assisting them with that process?
I mean, as usual, I'll answer it in a variety of ways. So ultimately, their short-term rental business is their business. If you want to become a niche expert in real estate and learn everything about short-term rentals, read all the books, open one yourself, like study all the financials, do it, go all in. That's what I do. So the idea that I would be able to just give you offhand advice, like, there's no way. Just as much as I don't know nothing about Cinco Ranch, I don't want to know about Cinco Ranch because I do not help people who want to live there. So find what you're passionate about and what you want to really focus on. I mean, like, we have agents who all they do is commercial or all they do is luxury. And it's a lot of work. They have to know those communities. They have to know what that person is looking for. They have to, become the master of that craft. So I would first of all ask yourself if that is the path that you want to take. If it is the path you want to take, just as much as if you were buying it yourself, read all the books, get on the podcasts, get in the forums, immerse yourself in that industry. Now, is that worth it for 1 or 2 clients a year? In my opinion, no. I would refer that business. And so that is what I do. I have a friend who's going to sell her house, $400,000. I am referring her to a friend of mine because she is not an investor. She has no interest in being an investor. And I talk to people like they're investors and it will not be the right fit. And so I refer out business. Conversely, I represent realtors all the time because it is what I do all day. So that advice was given to me by Mary in this office to develop referral partners. And so I would strongly consider referring them. And like, a lot of my business is referrals. I have no problem paying a cut to somebody else for referring in business because my average client will buy multiple properties in a year. So it's fine for me. I'm happy to pay out that percentage. And then for you, you don't have to go deal with learning an entire industry to help 2 or 3 people. But again, if you want to do it and immerse yourself in it, you can. But you have to treat it like I'm going to go master this craft.
Any other questions? Yeah.
Do any of you guys do one-on-one mentorships with newbies?
New investor or with clients?
With new investors?
No. We have an investment group of clients who we meet and we discuss topics like this. We bring panels like this. I don't know if you guys do any one-on-one.
I haven't. I'm more than happy to answer any questions that I can, but I am not sitting up here telling anybody that I know everything. But I'm happy to work through any conversations and answer the questions I have and work at getting answers to the questions that I don't, because I think that benefits both sides to be able to do that. And like I hired her as my agent, so I'm learning off of that. So that's kind of the way I approach it.
There are people out there who do it full time. So I think hiring a mentor is a great idea. It's absolutely a great idea. It is very expensive because they're making a lot of money in real estate, right? So they already know how to do all this stuff. So they're going to charge you a premium for their knowledge.
Do you do mentorships?
I don't specifically do mentorships. I'm looking into it. A lot of agents ask me. I get 3 or 4 calls a day from agents asking me for advice, and I have to be careful with that, right? Because that is a lot of time that people ask for. So I'm careful with what I do and how I help people, but I'm working on it. I'm considering doing more mentoring. So starting pilot groups, basically where you would go through as a cohort, but I don't have it figured out
I was gonna mention something for you. When you're working with new people too, new to investing, one thing that we've learned is you need to have some boundaries where they're not looking for you to define what they want.
Yes.
So
Yeah.
they need to put in the work to educate themselves and not solely coming to you to say, what's gonna make me a millionaire, you know? They can come to you for help finding it, but
And point them to the books too, you
Yeah.
know?
same resource.
I can't tell you how many times I've had potential investors call me and say, I want to be an investor. All right, where do you want to invest? Oh, anywhere in Houston. What do you want to spend? Doesn't matter. I'm like, set some goals with you. I mean, even if I have to walk through them to try to set up their target. Because if they call me like that and they haven't done any work, I won't even mess with them.
And honestly, even not that long ago, I spent a huge amount of time showing someone investment properties who told me that they sold their business for a lot of money and they were gonna buy these $1 million properties. And I spent so much time on them, were in no position to buy real estate. And it was a big lesson. I mean, it is a huge regret of mine. I spent an enormous amount of time with that person. And so you do have to kind of vet them and teach them how to vet themselves too. What's your plan? How much money have you saved? Do you have lenders lined up? How are you going to pay for it? How are you going to pay for the costs of doing this? I mean, those questions everybody watched HGTV during COVID and now wants to buy real estate,
It's
A
not.
lot of them expect the agent to tell them.
Yes,
There's
yes.
boundaries. Like you tell me if I was like,
Right.
that's like the fortune teller, right? If I know
Yeah.
the lottery numbers, I'm gonna go find them myself.
Yeah.
People have no idea too, that you're going to a property at 10 o'clock at night because your painter's coming the next day and another trade told you that they didn't install the baseboards in this area and you're having to go out there and,
That
it's not
sounds familiar.
It's not HGTV, yes.
Jill
Well,
just
and the
went through
price
all this.
points are typically small, Like you'll see me up here on this board all the time with 6 units. Did I make the GCI board? Only sometimes. I mean, it's a lot of work for people who are looking for very small, commissions for you. So the way that you make money doing this is scale, right? I would just remember that and truly consider referring it out.
As far as mentorship, keep in mind, y'all, I had to book these ladies a month in advance.
Yes, but they're busy.
And if anybody has any referral business in Austin, I'm a member of their board. Just
Yay.
putting that out there. And I work up there too,
Yeah.
so.
Well, that's all the questions. I'm being summoned to do something. Something must be going crazy. So
You're gonna end it here?
yes.
Okay. Thank you all.
Thank you.
Yay.
Lori.